Like, you have to be 100% focused. I think there are more astronauts on the planet than successful traders. When you really get into the market, you can't have an employee mindset. You have to really look at things completely differently. You don't place one trade and just like hope. Like, I'm scaling into position.
Welcome to another interview at the Trading Battle. This week we have Siam. Siam is an ex-RAF pilot who started trading at the age of 18. Over the last 20 years on the markets, he's publicly called many major economic events and profited from them, such as the 2015 Black Monday crash, where he made £422,000 in just 30 minutes, and the 2020 oil crash, which he shorted from $80 all the way down to $10. He's also made multiple 1,000% ROI gains in the last two crypto cycles since 2017. So, Siam, pretty impressive.
Oh, hi. Thank you. It's always very cringy when hearing someone talk about your background, I guess.
Yeah, I know.
But thanks for having me.
The RAF pilot thing really interests me. If you don't mind running through that for a minute or two. How did you become an RAF pilot?
I was obsessed. So I had this weird thing. If I get obsessed about something, I don't stop until I've sort of done it. So from the age of 8, I got hooked on becoming an Air Force pilot. So I literally devoted my entire childhood to getting into the Air Force. So I did every geeky thing you could think of, air cadets, like everything. I got my flying license, my pilot's license before my driving license. And then, got into the Air Force. So
you realized the dream at a very young age. So how did you trade while you were an Air Force pilot? I mean, it sounds like both would consume a lot of your time.
Yeah, it was not a good. In hindsight, I do cringe and also have some regret. So Air Force training is very intense. So especially being a pilot, like, you have to be 100% focused. And unfortunately, I wasn't, because I was also trying to master the market. I feel I was trying to master two of the hardest things that you could do: trading, which I think
I was going to say that,
and also flying, multi-million-pound aircraft. And the thing is, trading is a lot harder than flying. It really is.
Really?
I think there are more astronauts on the planet than successful traders. It's one of the hardest things I think you could possibly do. In fact, there are more surgeons on the planet than successful, consistently profitable traders. So it really is like one of the toughest things out there. And because of my obsessive nature, I was burning the candle at both ends, just trying to master trading and trying to, limp through flying training. And everyone thought I had a gambling problem, because I was losing $2,000 a month every month for at least the first 4 years. So I would literally, I remember for a long time, my income was £2,200 per month take home. I'd spend £200 a month in bills because I was living in the officer's mess. Pretty much everything was covered. And then I used to blow $2,000 a month trying to trade currencies. So I did that for 4 years. And after about 6, I finally got profitable. And that's when I really just screwed up my career and then left to trade full time.
And are you happy with how it all turned out? It was obviously worth it financially.
Oh, yeah, financially it's great. I guess the regrets I have is that the people I went through flying training with, I still see that, like, a chat with them, and they're all doing incredible things that money can't buy. So I've got, friends who are flying Typhoons, F-35s, F-18s. They're doing all sorts of exchange programs, and I'm like, wow, they're doing some pretty cool stuff. And so I do have some regrets, but however, the life I've managed to craft, I guess, has put me in a pretty nice position compared to the others. So I guess my friends are looking back over, what I'm doing or have done, and so the grass is always greener, I guess.
The good thing is the trading did certainly work out. So at least you succeeded at that. And it's actually a really interesting and important point that you've made, because obviously we've both, I'm sure, I know you're a mentor as well, and you're an author and all sorts of things in the trading space, which we'll come to. So I'm sure you, like me, meet people who, oh yeah, I want to be a trader. I want to make money. I want to create second income. And they just don't have the focus and dedication. They don't realize how hard it is. They don't realize you're not going to get this in 3 to 6 months. I get people coming to me and go, oh yeah, I've been trading for 3 years and I'm down £200,000. And I'm just like, my God, stop. You don't know what you're doing. Anyway, I just wanted to make that point. If you're starting your trading journey, be prepared. I love that comparison you made, that there are more surgeons than successful traders in the world, and I'm sure you're right.
Yeah, and the thing is, like, I've been trading, over 20 years now. It doesn't mean that I win every trade or that every year is booming. I still have down spells. The back end of 2024, there was a good 3 months where I couldn't hit a barn door. And the thing is, with trading, it's sort of forced me to develop a different mental model around the world. So, like, we all have these different sort of mental cassette tapes that are crammed into us from a very early age. So when you're a kid, you have all your peers effectively forcing their opinions and belief systems upon you. So your peers would be your parents, your teachers, and I guess the kids around you sort of re-echo those belief systems. And then when you get into the big wide world, and when I say not just having a job, but like when you really get into the markets, you can't have an employee mindset. You have to really look at things completely differently, and you realize that pretty much every belief system the world has forced onto all our kids, from school and whatnot, is utter bollocks. Sorry if I'm not, excuse my language.
You're right.
Like, and so you enter the world of trading with this sort of rosy belief system that governments are good and politicians are great. The government's only there to protect you, and that when we go to war, it's for good, noble reasons, to get rid of a bad dictator or whatever. Or the central banks are there to really look after our currency supply, and like, you enter the world with that sort of mindset, you're going to end up burning money. So very quickly, and that's why especially in the Air Force, you are massively institutionalized. So pretty much 99% of the people in the military, the police forces, held NHS. I say this lovingly, but you are automatons. You are robots. You have very heavily ingrained mental models which are not your own. And like, yeah. So I don't want to like piss all my old friends off. But how the real world actually works.
Yeah, no, I think you're right, and I think it starts at school age. At school, you're taught. You have to do exams on your own. You have to learn everything on your own. You have to learn subjects that you've got no interest in and don't really understand, and your brain's not built for. And of course, when you go into the real world, you have to start learning to ask for help and realizing that actually working in a team, especially, I know you're an entrepreneur as well. I believe you have 1 or 2 other companies. Is that right? Yeah. So as an entrepreneur, you understand that team, being in a team or being an RAF pilot, obviously you understand being in a team is important. So the one thing I wanted to ask you was risk versus reward in a fighter jet is obviously something pretty important. You need to take that jet to its limits. And obviously not past it because too far is probably death. So your understanding of risk versus a reward from that perspective, was that something that carried over into your trading?
Yes and no. Yeah. So I guess like when you're flying, the risk to reward is always like leverage. It's a double-edged sword. And when you screw up the risk part with flying, you typically die. So there's a saying of there's old pilots and bold pilots, never both, as in never old and bold. So yeah, you could very easily put yourself into very bad hiccups when you're in dynamic situations. So if you're doing like low level flying, so here's an example of how I this is how I knew that I had to leave the Air Force. I was doing low-level flying at one point. I was in the Welsh valleys, and I was weaving through and whatnot. And as I was going around the corner, for about half a second, I was thinking, I wonder how my cable trade is doing. So I was wondering how my pound dollar trade was doing. And in that split second, my brain just went, "Oh, is my stop loss all right?" And and I realized, shit. And I almost killed myself. Like, and it sort of went down from there. Uh, and and I guess from that, it was from that day. This was, God, a long time ago. I realized that if you're ever worrying about a trade, or you're worrying about your stop loss and whatnot, you've really screwed up in so many ways. One, your stop loss is way too tight, which also means you entered incorrectly. And also, you're risking way too much per trade. So there's so many things wrong with that. And like you said, if someone comes in wanting to be a trader and whatnot, and like it's going to take years, and you really shouldn't be deploying huge amounts of capital until you really know what you're doing. I mean, it took me 4 to 6 years to get good.
Yeah.
And I was obsessed, and it took me 4 to 6 years to get good.
Listen, I was on the trading floor in the 90s. It was my job all day, every day, on the floor, mixing with traders, being trained by traders within my market making firm. And that still took me 3 to 4 years. And people think they're going to come along and do it in 3 or 4 months. You're absolutely not. And the interesting thing is, this conversation, you've taken it straight to the psychology level. You haven't talked about your analysis and your execution. You're just, proving to me that you don't need to prove to me, but you obviously know exactly what you're talking about, and you know that trading psychology is the absolute most important part of it, just self-control and leverage control and everything else. So talk me through your trading process. Are you purely a technical trader? Are you a fundamental trader? A mixture of both? You're obviously a swing trader because you couldn't achieve the kind of trades that you've done and the results that you've achieved without having that style of trading, I guess.
Yeah, I'm both. And the thing with crypto is that, again, crypto will humble you as well. So there's me coming from, let's say, TradFi, being a currency trader for donkey's years. I had all my systems, I had great expectancy, all that sort of stuff. And I thought, I could just, take my forex stuff over to crypto, all will be good. And very quickly realized that pretty much nothing worked. Because crypto is so small that a random Twitter person with a semi-large following could move an asset on his or her own. One little tweet, and your setup, your system will be completely, defunct. And so, there's 3 types of analysis. There's, fundamental, technical, which everyone really focuses on. But there's also the sentimental analysis. And with crypto, I found very quickly that sentimental analysis was a way bigger thing than in currencies, where really, I had sort of crafted out my little niche with the majors. And I had really boring, easy setups. I was effectively looking for low tests in a bull market, high tests in a falling market. I had very little indicators, but I knew that, effectively, for those of you who don't, to the viewers who are not sure what I mean by a high test or a low test, let's say a falling market, the markets are very reflexive. So I always imagine Mother Market being like a pair of lumps. You breathe in and breathe out, breathe in, and the market going up and down is breathing in and out all the way up and also all the way down. So the market has these natural reflexivity. So when it's going down, it's never just tanking, or very rarely tanking. It's like it's like a staircase all the way down, but a very irregular staircase. And on one of those reflexive moves up, whenever you get a swift rejection on a move up, the market will obviously be pushed down. So if that happens, let's say you look at the daily chart and you see a big move up, and then in the same candle it's rejected. What you have is a big wick and a very small body towards the low. So that's what I call a high test. I know in the internet and social media is given all sorts of funny names for stuff, like shooting stars and hammers and all that sort of stuff. I've always known there's a high test and a low test. So if I saw a high test in a falling market, I would short the shit out of that. You could put your stop very close, relatively close to the top of the wick, and then looking for 5-hour trades. So that and I think, like yourself, you've probably heard all sorts of crazy, complicated things with a million different indicators. Like, for me, none of that shit works. Like, you can have it.
You do that with your chart, don't you? You just lift your chart with everything, and then you start cutting it back to what actually works. It's a very long process, and what you've just described is just visually seeing demand and supply. You've seen supply come in the market. You've got a long upper wick on a candle. The bulls couldn't retain control of the market. The bears have. Hey, I'm going with the tide. The tide's obviously heading in that direction, and that's the path of least resistance. It's not that It's not that hard, but of course, execution and trade management and account management, that's where it all goes horribly wrong.
Yeah, and my charts are always naked, and like at the most, I'll have a couple of support or resistance levels, but no indicators whatsoever. I think you really, like, in my opinion, I only started getting consistent returns once I started looking at price action for what it is. And a lot of people just, like I said, they load up every indicator, and every indicator will be telling you different things. Then you're like, oh, which one do I trust? And then a lot of people add way too much weight into lagging indicators, which most indicators are. Again, a lot of, like, the holy grail of trading is really the volume indicator, but none of us has the perfect volume indicator. Only the quants have perfect volumes, and then they're doing all sorts of sandwich attacks and MEV botting and all that sort of stuff. So if you're like an average Joe like myself, and you're using TradingView or whatnot, you need to dump all your volume indicators, because you probably only look at volume from one exchange, not all exchanges, not from all traders, not from OTC. Like, we do not have the perfect volume bot or indicator unless you're BlackRock or Goldman. Yeah. So I'm just curious. So
Wow.
were you on the old school floors with the colorful jackets and like shouting?
Yeah. I'm about 20 years older than you, Siam. So I was down there in the mountains. I started in '87, so I've been around for. Well, I've been trading for 38 years. Yeah. I'm an old boy.
Wow.
57 yesterday. It was my birthday.
No way. Yeah, I was born in '86.
Wow. Okay. That's amazing. Okay, so you were probably 6 months old. I started in April 1987.
Jeez. That must have been crazy. Like the noise.
Yeah. I started
from everyone shouting.
Yeah. When I first went on the floor, it was terrifying. I'd never experienced anything like it. You've got these guys screaming and shouting, waving their hands, the coloured jackets. So intimidating. And I just thought, how am I even going to learn the hand signals? Let alone, I was not an aggressive guy. Public school education, I really didn't really fit in, and it was terrifying. I don't know how I managed to make it, but anyway. So talk me through one of your setups then, because I'm fascinated, as I'm sure everyone is. 422 grand in 30 minutes. I mean, that's insane. How did you do it?
Oh, geez, that was 2015. That was August 2015. And that's about as much as I remember. So, like, one of the things, it's a very cheesy phrase, and it's in every trading book, but I genuinely believe it. Like, no trade should make or break you. No trade should be, wildishly different, because the setup is the setup, I guess. So when I have losing trades, I'm like, okay, that's just part of your expectancy. Especially so with my technical trading, I've always had so I guess, without complicating too much, my hit rate was only about 35%, maybe, or 35 to 40% hit rate. I would never give a shit about, I'm always right or wrong. Like, that's just not how my expectancy worked, because my R multiples were like high enough, sufficient, like at least a 5-hour trade. it meant that I could be wrong, 70 to 75% of the time and still make money. So I very quickly got out of that silly, like, mental pit of being like, oh, every trade must win. We're a load of newbies. They get fixated on that, and like, especially these days with social media, like if you're a trader, like a public trader, and you've only got a 30 to 40% hit rate, everyone goes, huh, he's shit, he doesn't know what he's doing. Every trade he does is wrong. And
I get asked what's my win rate, a new subscriber comes along. Oh, what's your win rate? What's this? What's that? And, I just think half the time I say, listen, do me a favor, go and find another service. I can't be asked to waste my time with you interviewing me for what, 100 quid a month. I just like, you're a time waster. Sorry to interrupt you, but I get it. You're obviously working on that sort of Pareto principle, which I do believe in. You make 80% of your money, 20% of your time.
Yeah. And it's also not about like having one trade that freaking hits the moon, because if you're in like, if your fundamental, so if your bigger macro picture is solid, then your sort of medium level fundamental pictures are solid. And then when those two are lining up, and then you see a shift in sort of sentiment and whatnot, and then, all the planets are aligning. So the macro is aligning, the fundamentals aligning, and the technicals aligning. And then it's like, right, this should be some bull market or a bit of a, sell-off. You don't place one trade and just like hope. Like, I'm scaling into positions. So that first trade you put into something is you dipping your toe in the water, trying to find a good entry point. And you're scaling in. So in that Black Monday event, it wasn't one trade. I think I placed, in fact, it's on my website somewhere. I literally, there's a PDF on my website where I posted every trade of that day. There was at least 100 trades in that 30-minute window.
What?
And the two main positions, which, being a manual trader, I've never really done algo stuff. I mean, I was like that cat meme just just on the keyboard. So there were two main positions in there. There was pound Kiwi. So I was long on that, and I was short dollar Swissy. No, that was the Swiss. So in 2015, there's two big liquidity events. So there was when the Swiss franc unpegged from the euro. I was long dollar on that one. So that was a great month. So I'm blurring those into the same thing. And no, so August. So the Black Monday thing was, I was expecting a stock market crash. God knows why. I can't remember the fundamentals back then, but I saw weakness, and I said October. Where is it? Yeah. So statistically, stock market crashes tend to happen in October. If you were to look at the main markets over a 50-year period, October is the dangerous month. And so all of that year, I was saying stock market crash in October. Oh, yeah, and that, you get most of the sort of the Q4 liquidity starting to ease in. I guess when you're looking at the bigger banks and whatnot, everyone has a fresh new book, 1st of January, brand new year. Like, it's irrelevant what you did last year. Everyone's on a level playing field. You then have a fair bit of volatility in Q1, maybe a bit of Q2. Then everyone goes on holiday for the best part of 2 months. Liquidity thins. It doesn't dry up, but it thins up a bit. You have big hedge fund managers going to St. Bart's for a bit of a break or whatnot. And then post-summer, everyone's coming back ready to, either, well, two things, either catch up to, if they had a bad year up into that point. You then have some people that are just trying to like lock in profits. They may have had a good, Q1, Q2, and they don't want to shit the bed before the year end because that affects their Christmas bonus. And then, obviously you have everyone in between. So, but typically October is always game time, and I was positioned. I had a lot of fishing traps in. So at that point, I don't use them anymore because I was expecting the S&P and the DAX, to drop. I had a bunch of what I call fishing nets, so entry sell orders basically. I think there were some big support levels, and I thought, right, if they start breaching,
it's going to be pretty fast. So I had a whole bunch of entry sell orders. Once they all triggered, and a lot of them triggered.
Like an avalanche.
Yeah. But I was waiting for the pullback because, like, any big, level breach, you always get a retest. I call it a Kobo, a kiss off, bugger off. So,
yeah.
And then on the pullback,
especially in stock markets, they do that. They're hard to trade on.
Yeah. So, but again, I went all in on crypto 2016, and basically none of the stuff I use for currency trading followed over. It's just, crypto is its own.
How did that work, Gozer?
It was painful. I lost a lot of money probably in the first 6 months, just thinking I could just move my systems over to crypto when really it's just crypto, random crypto either pump or dump on basically nothing. No technical analysis, it was just pure fundamentals, So I quickly began to learn what to trust and what not to trust. Basically, don't trust any VC launched crypto because typically what happens is, a bunch of big boys get together, they go, right, let's launch a new coin. You have 1,000,001 different pre-seed early investors. The team has got a whole chunk. So when you look at that pie chart of who owns the tokens, and it's like 70% of the early investors and the VCs own the tokens, and they're taking IPO mentality, it's a new word, methodology, and bringing it to crypto. So when you IPO a business, typically you're only listing, pushing 25 to 30% of the stock to the public, and everyone else keeps the rest. But you can't do that in crypto anymore. Or back in the 2016 to 2017, it was right. So all the insiders had 70, 75% of the tokens. They pumped the shit out of it to the retail investors. And yes, it would go nuts. But guess who's selling on the retail? All the pre-seed investors, all the VCs and stuff. And then you end up with endless pumps and dumps, and where it just flatlines forever. So with crypto, I've had a very strict rule of only touching fair launch crypto. So if you look at Bitcoin, was the first proper fair launch coin. So it was code that was just released into the wild. Anyone could, pick it up. There was no pre-mining, so no one had, got any secret Bitcoin or token. So whenever I'm looking at a fair launch coin, it's just code that's just released into the wild, just like Bitcoin was. No early, yes, there would have been founders and whatnot, but they didn't like stash away, they're out there mining or participating from day one. And so that has helped me a lot, looking at fair launch coins. Again, avoiding any pie chart work or token distribution where the pie chart is just full of team members or all that sort of stuff. And you sort of really have to shed a lot of the traditional finance type stuff when it comes to crypto. Completely different beast.
Okay.
Got a little one there.
To me, I don't know anything about it. I follow Bitcoin and that's about it. That whole area, I couldn't get my head around it. So what does a typical trading day look like for you then? You're obviously not, are you scalping away and then looking while you wait for the big moves?
No, it's so different these days. So in 2017, I created this thing called the Bitcoin fractal cycle. And it was this model which at that time, it was very flimsy because there's only 2 data points. And from a statistical point of view, any model that it's based on 2 data points is very flimsy. So moving into sort of however, in 2017, it played out perfectly. I thought, interesting. In 2020, things, the model was still intact. So I was basically going, right. So here's what I created back in 2017. So if we go to the weekly log chart, basically, the only constants in Bitcoin are the 4-year halvings. So every 4 years, Bitcoin has an emissions halving. So these are these thick blue lines. And what I sort of theorized back then is that, okay, they're the only 2 constants. And
and I was looking for patterns, going back into earlier cycles. And I realized that Bitcoin moves in 3 phases between each halving. So you'd have the halving, you then have the batshit crazy bull market for a year, it then crash heavy for a year, it then be choppy sideways movement for a year and a bit up until the next halving, then boom, back into the next green phase, red phase, yellow phase. And it's worked like textbook. Like it really has. I milked the 2021 market based on this. And then I had all these other sort of bits and bobs. So for example, I realized that 6 months before the halving, which is represented by this sort of, this bit longer here, but if you took the 38.2 Fibonacci level from the previous all-time high, it would hit that level 6 months before, anytime 6 months until the next halving. And again, this is what this orange line has done, and it's been, again, spot on. So I sort of had a rough idea of what the price of Bitcoin will be at around the halving, or 6 months up and to that. And as you can see, this fractal cycle has been beautiful. And I created this sort of peak to low multiple, and it's a linear reduction. So basically, if you took the all-time high here divided by 8.1, it gives you $144. The actual low is 152, but then it goes down by 1.8 each time. So the next one you divide it by 6.3, this one divided by 4.5, the next multiple divided by 2.7. So again, the 4.5 multiple was correct. So here you took the all-time high divided by 4.5, gave you 15,303. The actual low is 15,482. It's close enough for government work. And so what I'm sort of expecting, and again, this is where I'm showing you all of this, but I'm about to say this model is breaking down.
Okay.
So I personally think Bitcoin is going to be around 250K by year end. Divide that by 2.7 gives you sort of 93K. That's what I've had for a long, long time, but I'm now starting to doubt my own model. And there's a lot of reasons for that. The main reasons is that institutional money is now stampeding into Bitcoin, like way faster than I ever sort of forecasted. Like it's got to the point where the US government, once the Loomis Act is passed, will be buying 1 million Bitcoin over the next 60 months. So they're adopting that. They've got a strategic Bitcoin reserve. They've got a strategic crypto reserve as well. The US states are adopting a strategic Bitcoin reserve. Many other countries are. Like, there's not enough Bitcoin for all of these entities. So like BlackRock as well, all of these entities to gobble up all the Bitcoin that they say they're going to be gobbling up. We're going to have a supply squeeze like we've never seen. So I think this is the last model. So I think this is the last cycle where my model is intact. I think from the end of the year, it's game over. I don't think Bitcoin will have a bear market like we're used to. Yes, we see diminishing returns and diminishing sort of sell-off. So this cycle, Bitcoin crashed 86.9%, then it crashed 84.12, 77.46. I don't think it's going to crash 61% like my model here says. I think what we'll have is a bifurcation of the crypto market, where when we have this sell-off, I think Bitcoin will just continue going up forever, and every other crypto will continue to have a 90 to 80% crash. Like, putting it this way, like BlackRock is piling into Bitcoin. They're recommending all of their clients that they all should have at least 2% of their net worth in Bitcoin. This is Larry Fink saying this. We're having Fidelity and VanEck and all these other, I'll stop sharing now. All of these other entities say, you need to have a chunk of your net worth in Bitcoin. But the supply is not there. So I don't think BlackRock will allow their clients to suffer a 70% crash. Like, you're having all these ETF buyers. I don't think Larry wants them to go through a 50% drop pullback because that's their business. So at the most, I think Bitcoin will suffer maybe a 30 to 40% crash, but then just shrug it off and then continue growing. Whereas every other crypto will go through a 70 to a 90% crash. So going back to your long question of what does your average day look like? Well, for the last 3 years, I've been gearing up for 2025. So I Q4 2025 is where I for a long time seen that the bull market really gets going, and the market's showing us that right now. We've had Trump tariff season where everyone did a stupid knee-jerk reaction, and I was like, everything is going to get V-reversed out of this, and then everyone will forget it. And guess what? The S&P 500 is now like screaming back up. Everything is V-reversed, and Bitcoin sat there at $104,000 right now, about to zoom up to 120 relatively soon. So, sorry, I'll just stop vomiting over you now. So I'll be quiet.
No, I mean, I love it. That's very educational for me. I follow Bitcoin, but I don't understand any of the fundamentals. So I found that very interesting, and I have no doubt people watching also found that really interesting. I saw just from your chart. I mean, your projection for this move is to go to 250.
Yeah,
yeah. So we can more than double. No problem.
Yeah, but the thing is, it's not a thumb in the air sort of guess. Could I quickly show you how I come to that sort of conclusion?
Yeah, I love it because it's all very mathematical, and it just proves there is such a mathematical element to markets, especially when you remove governments and central banks and that kind of thing.
Yeah. So again, just move StreamYard to the left. Can you see my chart again? And hey, like magic.
Yeah, it is interesting to me. It's coming in now. It is interesting. It is really interesting to me because when my technical analysis on Bitcoin just works so well because it's a purely technical market.
Yeah, 100%. So, okay, so let's start with this is a bit of a messy chart. So this is the Bitcoin market share chart. Again, these vertical lines are the halvings, and we can see some sort of pattern here, can't we? Again, between the halvings. Yeah. So this is basically showing Bitcoin's market share. And so when Bitcoin has a sell-off in this market share, that means the bull market started because alts, so alternative crypto, so basically everything but Bitcoin starts, shooting up. So obviously, the alt market always moves faster than Bitcoin. This is where you get your crazy 1,000x returns and whatnot. And so here you can see that Bitcoin went from sort of being pretty much the only thing in crypto, 90% of the market. And then in 2017, it crashed all the way down to about 35% market share. So that meant every other crypto really got their racing boots on and just gobbled up market share. And then we had the bear market. And guess what? Bitcoin recovers. So you can look at this chart and see that for roughly 80% of the time, Bitcoin is the best performing coin. It's only in these little green bits here where the alt market is outperforming Bitcoin. Does that make sense so far?
Okay.
So really, it
makes perfect sense. So that's your indication the market's turned.
Yeah. So historically, I've been caught with my pants down relatively recently because historically, the alt market has started roughly 36 weeks post-halving. Here is about 35 weeks post-halving. You can see Bitcoin just lost market share. And so guess what? I thought probably 36 weeks post-halving, we'd have a bit of the alt market would start. But if we zoom in here, we had a bit of a fake out. So Bitcoin did start pumping or losing market share around sort of 34 weeks in. And I thought, maybe it's a bit premature. Okay. And unfortunately, I geared myself up into alts around November 2024. And then look what Bitcoin has done since. It's completely faked me out. So a chunk of my crypto positions have been underwater since sort of November 24. So really, the last 4 months I've been underwater. However, I think this is we're starting to see the fall over now. So again, I was premature, but I think from a bigger picture, this will happen. This is, I'm 99% positive that the alt market's about to kick off like now. But the question is, where will Bitcoin fall to? Again, no one really knows. And the best thing we can do is to draw a big fat support level. and that's all I've done. I've just connected the support levels. So here, all I'm saying is that I think there's a relatively high probability target that Bitcoin drops to about 43% market share. So if we just store that in our mind for the moment and we go, okay, let's say the alt market is about to start booming. Bitcoin's going to give up a little bit of, but yeah, let's say only gets to 43% of total market share. So the next logical question you have to ask yourself is, okay, well, in this next bull market, how high is the total market cap going to be? It then leads us to this. This is my favorite chart in the whole of crypto. No one else really looks at it other than me, I think. Mind you, I don't follow anyone other than Elon Musk. So here we have total crypto market cap. Okay, this is the total amount of money or value. It's not actually the total amount of money sloshing around it, but that's another topic here. So at the moment, we're sat there at $3.31 trillion. Now, this is where my technical sort of analysis comes in. I've noticed before every blow off top, we have a falling compression. So this is one of my favorite continuation signals. When you see a falling compression in total crypto market cap, it zooms up. We had another falling compression here. COVID sort of did a wobble on this, but then went up to all-time highs. And then we had a lovely falling compression here. It's broken out nicely. Again, we had a mini fake out here. But long story short, I see total crypto market cap getting to my big green hole. Now, I sort of joke that it's a massive cop out here because it's a $10 trillion range. So I see crypto getting between $6 trillion to $16 trillion by end of 2025, or maybe sort of limping over into Q1 next year, potentially. But this green hole.
Now, that's why you've got a 250,000 target.
Yeah, because I genuinely think that crypto will be about $11.6 trillion by the cycle high. So if we put 11.6 trillion, so that's
you're talking about nearly quadrupling from where we are now.
Sort of. Wait, so that's 11.6. So if we then find 43% of that gives Bitcoin let's near us down at $5 trillion market cap. We then divide that by the floating supply of Bitcoin by then. I mean, I could work this out precisely, but it's going to be about 19.9 million Bitcoin. And that gives us 200. I think when I work it out really precisely, it gives us $256,000. But again, it's near enough down up there. So if
I think we have we have the title for the podcast now, don't we? Siam says Bitcoin's going to 256,000.
Yeah. Based on these ifs, if total crypto market cap gets to $11.6 trillion, and that if Bitcoin settles down at about 43% market share, we see 250. Okay. And yeah, which is like a 2.5x from here for Bitcoin. But there's many other crypto which will do 20x's from here, easy.
Wow. That is fascinating. It really, really is.
So I never
Sorry, say that again.
So here's the crazy thing. This is a bit like one of the sort of the Matrix red pill, blue pill type thing. I had a massive wet kipper face slap years and years ago. I don't know, 2018, and I realized, holy crap, the world is failing, as we know, obviously. But when you look at the global monetary system, it is massively failing. So humans have a 100% track record of destroying fiat currencies. Well, put it a different way. Once a fiat currency is born, it has a 100% failure rate, i.e. a currency not backed by anything. And so when you look at the global, the central banks all around the world,
they all inflate the currency supply by about 15% per year. You can look at pretty much any time frame. The Bank of England, the Fed, they're expanding their currency supplies roughly 15% per year. So my first sort of shock was like, oh my God, if your money, your savings, your investments is not making 15% per year, you're losing purchasing power.
You're losing money. Mm.
So I value everything against the M2 currency supply. I don't look at it against the dollar or the pound. I value everything against the currency supply. And so when you look at that, you realize everything is basically on flat or down against US M2. Dollar is still king at the moment, for the moment. So you have to look at the US currency supply. And so, yeah, everything has gone down or sideways when you're looking at it against M2. So I realized, oh shit, I need to make more than 15% per year in order to actually make real wealth on this planet. And people talk about the cost of living crisis. Well, we printed $5 trillion out of our ass during COVID, in furlough and lockdowns. Where do you think that money goes?
Before COVID, we were already in a mess.
Yeah, exactly. And so when they go brr at the printers, it goes to stocks, bonds, commodities, real estate, which is why you see asset prices boom roughly 1 to 2 years post printing, which is where we are now. The S&P 500. Again, I'm so sorry. Can I show you these charts? They're really important. So first of all, in fact, I made it a slightly cleaner. If I just find this quick PowerPoint, I'll be able to show you the pictures even quicker. Here we go. So gold against, and by the way, I used to be the 4th biggest online gold and silver bullion dealer in the UK. My whole life back in sort of 2010 was all about gold and silver. And then around 2013, when I started understanding macro a bit better, I realized that my whole life was a lie. Not a lie, but like I'd geared up my whole life, around gold and silver. And I realized, shit, I'm playing with the wrong asset. Because sorry, I need to move my, I can't see. Yeah. So if we look at this, gold against USM2, gold's done bugger all since, the 70s. Unless, you bought it in 2002. So gold is just a store of wealth over a long period of time. But gold, like S&P 500 against USM2, the stock market has also done bugger all since the 1960s. So we had the tech bubble boom in the year 2000. Yeah, so USM2 is real inflation, not the CPI, which is the CPI. So this is the only way to look at real inflation. So I realized, the stock market doesn't do anything against currency supply because, M2 is just going nuts. If you were to look at USM2 on its own, it looks like this. So basically, in order to make wealth, I mean, if you just look at, let's take year 2000 to now, so it's the last 25 years, the US currency supply has gone up 360%, which means your asset, your beloved asset, whether it be a stock or a property or a bond or gold or whatever, has it gone up more than 360% in the last 25 years? The answer is no, most likely, because when you look at the S&P 500, the answer is no and we've only got this spike here because of the COVID pump. That's $5 trillion for plowing into the stock market and bonds and real estate. Also, when you look at UK house prices against UK currency supply, this is like the most bearish chart you'll ever see. Everyone, literally, I could probably name 100 people that I know who have bought a house in the year, in the 1990s or 2000s. They've gone, I bought a house for 100 grand and it's now worth 300 grand. But in purchasing power, they've lost value because the currency suppliers absolutely outpaced them. Bitcoin is the only asset on the planet. Yeah, this is why I've never bought a house. So, because you're losing purchasing power. Oh, and here's the other thing. You can really game this chart really easily. So if I get my little pen out here.
The only things I'd say about housing is that it can, I'm in the property market and I get a good yield out of it. But anyway, carry on.
Yeah, obviously. So those that do well in property, they're business owners. That's the key thing. They're business owners where the property is the widget, not like the average Joe's done a buy to let, hoping it goes up. So here's the thing. When the Bank of England, let's say tomorrow morning, the Bank of England goes, hey, we're printing $1 trillion because whatever. This chart, let's make it a bit thinner, this chart will vertically go down pretty much. Because when you print $1 trillion of pounds, it takes time for that to percolate through the system. And it's only a few years after that, or 1 to 2 years after that, that property prices start to surge. So if you wanted to really nail the property game, but using M2 to your advantage, you wait for the Bank of England to print. This chart basically goes vertically down, like we saw every other time the Bank of England has printed heavily. And then you buy property here and then flip once it's recovered. But again, it's still too low a ROI for me. So when you look at Bitcoin against US M2, it's the only thing that's just absolutely dominated M2. And to put that in perspective, it's not just dominated it, it's 59,000% dominated US M2. So Bitcoin is 100 so since 2010, Bitcoin has gone up 104 million% in nominal terms. And it's still very early. But against M2, it's only gone up 59,000%. And then when you look at, again, Bitcoin in house prices, look at this. So here I've taken the average UK house price and I've taken the lowest possible price for Bitcoin in each given year. Can you see a trend? Here's another trend. Adding 2025 so far, 4.7 Bitcoin to buy one UK average price house using the lowest price of Bitcoin. But it's even better now. Like the exchange rate is what, 1.32. So if we take the price of Bitcoin right now, 104K, divide that by 1.32, that gives us Bitcoin at a price of 78,787. So let's call it, just for easy math, 79K. So if we take the average price house right now, divide that by 78K, 3.42 Bitcoin will buy you an average house outright, mortgage-free right now. This trend is only going to continue falling, Jason, like precipitously falling.
No, I'm blown away. I don't mean to interrupt you, but I never got my head around crypto, and I was always focused on other things anyway. I should have focused on it, and I didn't, and I missed it. Doesn't matter. I got in on many other things. And I spent a lot of time 10 years ago talking to a lot of people and saying, convince me, why should I be in Bitcoin? And I was telling people to buy it, by the way. I just was building houses like it was going out of fashion. So I didn't have any spare money. And no one ever gave me a compelling argument. They just didn't. And I could always pick holes in their arguments. And so I thought, I'll just keep building houses. It's working for me. And this is the first time anyone has ever given me any really clear logic as to why I should have bought Bitcoin. And now I feel like a complete idiot. But, it's just so obvious. It's so smart that you told me. And so obvious now, I didn't see it. And no one else that I know saw it. And I talked to a lot of smart people.
Yeah. And I was the same with, back in 2013. Up until that point, I was so obsessed with gold and silver. I read Rich Dad, Poor Dad when I was 23 years old. And that was like a big slap in the face, go, whoa, I need to not be an employee, but be a business owner. And then
I read it at 23 years old as well.
Yeah. And so that really got me down the whole gold and silver thing. And then I started understanding M2 and I was like, oh my Lord. But here's the thing. Bitcoin is the Noah's Ark. It's the financial Noah's Ark. So the US dollar, the pound sterling, they're all on terminal death. They're on their deathbed. It's a terminal decline now because they can only print their way out of Dodge. US debt will always be higher than the currency supply, always higher than GDP. So as much as Doge and Trump says they were going to balance the budget, they have to print. So for example, here's something else that not many people know. In the next 6 to 9 months, the US government has to refi $9.1 trillion. No one has ever done that in such a short period of time. They have to refi roughly 25% of their US debt in the next 6 to 9 months.
So every 1% of US Fed, the Fed effective rates, that the Fed funds effective rates or US interest rates. So every 1% they can lower that, they'll save $100 billion per year in interest only repayments. So that's why they're really trying to focus in dumping rates and the 10-year going down. But going back to the main point, they'll always continue to print, which means the dollar, the pound is going to die, which means anything that cannot be printed or inflated away or is disinflationary or non-inflationary or even deflationary, that will get value. Bitcoin, there will only ever be 21 million Bitcoin. There's roughly 92% of the supply already out there. It's like the last Bitcoin to be mined will be the year 2140. And it'll take 100 years to mine that very last Bitcoin. So we're at the plateau part of the emissions curve there, which means economic wealth will continue to flow into Bitcoin forever now. Forever. So it is the financial Noah's Ark. But here's where myself and Bitcoin maxis sort of diverge. I am a Bitcoin maxi. Like I am a Bitcoin purist. But where a lot of sort of other maxis think, Simon, you're a joke, you're not a purist at all, is that they don't understand. I'm a trader, right? So in my mind, I'm now fully obsessed with Bitcoin. I measure my entire net worth in Satoshis. How much Bitcoin am I worth, if that makes sense? But the thing is, if I were to just plow 100% of my net worth into Bitcoin right now, I have to basically say, right, that's me done. I'm happy. Let's say I'm worth 10 Bitcoin. That's it. I'm only worth 10 Bitcoin now. And that's it. But I'm a trader. I want more than 10 Bitcoin. I want more than 20 Bitcoin. So the only way that I can get more Bitcoin is to do activities that outpace Bitcoin. Does that make sense?
Sure.
If I want to make, so if I want to make more Bitcoin, I have to do things that make me a lot more money over here, so I can then buy more Bitcoin. So that's where I diverge.
You have to generate.
Exactly. And there are two ways to do that. Is one, business. Business is another. It is the best way. And the other way is to play with crypto that moves a lot faster. So Bitcoin is a massive oil tanker. And I play around on the jet skis and the catamarans, the frigates that move a lot faster and much more agile. But there is method behind the mayhem. It's not just me picking some random shitcoin and hoping for the best. Crypto follows the real world as close as it can, and it has these cycle narratives. Every cycle, so every crypto cycle, the main narrative, the top 2 or 3 coins gobbles up 2 to 4% of total crypto market cap. So in the 2013 cycle, it was all about the Bitcoin copycats. In the 2017 cycle, it was all about smart contracts because Ethereum was born back then. And then in 2021, it was all about, again, smart contracts, Ethereum killer, and DeFi, so decentralized finance. And the top 2 or 3 coins in each of that cycle narrative just gobbled up the market. Take it, for example, take Cardano, a shitcoin in my opinion. It went from 0 to $95 billion market cap in 6 months. It was about 4.5% market share, and it had 0 ecosystem. It still doesn't have an ecosystem. It's just malware. Hypeware. And so this cycle, so for the last 3 years, when you say, what does my average day look like? I really don't know how to answer that, because the last 3 years I've been gearing up for 2025. And I've said the 2025 hype narrative will be AI, especially from 2023 when we had the birth of the transformer with LLMs coming in. And so AI is definitely the hype cycle this season. So I've been looking for literally the last couple of years, is a fair launch crypto AI project that is decentralized, distributed, open source, the exact opposite of what OpenAI is, or xAI or Google. And so, and I found it. So I'm all in on that because it is the hype cycle. Plus, if you look at the charts of AI, they're vertical, right? So if you look at ChatGPT or any of these AI charts, every chart is pretty much vertical. If you look at the chart of decentralized, distributed, open
source AI, it is even steeper. To the point where these decentralized AI models are absolutely destroying open AI in all sorts of different things. So yeah, so I have the big macro picture. It's only going to be diluted in terms of currency supply. Economic energy is flowing into Bitcoin as we speak from, governments, billionaires, states, corporations. Michael Saylor's trying to fund another $40 billion. But on top of that, AI is the fastest growing thing ever. But decentralized open source AI is even faster. So I'm all in on that. And that's how I can get more Bitcoin. So,
wow. My mind is blown. That really is incredible. Thank you so much for that. So yeah, talk a bit more about yourself. I'm still processing what you said. I mean, that really is quite incredible. I have an AI company, actually. That's one thing I managed to get on the trend fairly quickly.
What is it?
Yeah. I have a company based in the Philippines with about 15 people, and we develop custom AI solutions for companies. And I'll be honest with you, I don't understand a word of it. I go to meetings, and these guys are so smart. They explain stuff to me, and I'm like nodding my head, and I'm thinking, God, I have no idea what any of you are talking about. You are so. I didn't realize people that intelligent existed. I thought I knew smart people because I come from the trading world, and I'm fairly successful at that. And I'm not, as well. I've got other businesses and stuff. Well, these guys are off the scale. Anyway, so listen, author and mentor, as well as entrepreneur and smart guy. So how can people contact you? Because I think after watching this, there's going to be a lot of people that want to talk to you.
Yeah, so I'm going to shoot myself in the foot here. So here's my book. I genuinely, I've got 2 books. The first book is called The Crypto Book in 2017. I'm not that proud of that book. Don't read that book. I'm actually really proud of this book. But
listen, you're crap at marketing.
Yeah, I am. Here's the other thing: don't buy this book. And the reason being is that I'm personally not a reader. So for me to sit still and read a book just never happens. But I'm always on the move. So I'm an audio person. So if you are an audio person like myself, go to YouTube and type in Siam Kidd Get Filthy Rich. And I've put the entire audiobook on YouTube for free with all of the pictures.
Whoa.
So there's 200 odd pictures in this book. You know me, and I like charts. So this on Audible wouldn't have gone down well because there's too many pictures to. So on YouTube, my audiobook is for free. So you don't need to buy this. It's on Amazon if you did want the hardback. But so definitely that book really distills how I think about the world and where I'm going in moving forwards. Post crypto cycle, I've got a lot of crazy businesses I want to set up, and I'm on Twitter, so at Siam Kidd.
Double D, isn't it?
Yeah, double D. And I guess if you're a high net worth and you don't want to fiddle with the really fiddly stuff of crypto, I have a hedge fund. It's called dsvfund.com. So it's
dsvfund.com. If you want to get exposure to crypto through your genius.
So it's like a typical hedge fund. I spend 15 hours a day sat in this chair staring at screens. So if you want to leverage that, it's that.
Awesome. Wow, Siam, I've really enjoyed that. I really had my eyes opened. At my age and with nearly 40 years experience in the market, I didn't think I could have my mind blown, but you've definitely done that today. It really has been such an interesting conversation. Thank you so much.
Well, thanks for having me. Sorry if I was just transmit only. I tend to vomit stuff over people.
That's the whole point of the podcast. People don't want to hear me talk. And what you said was just incredibly interesting. So I really, really thank you for giving us your time today. Very kind of you.
Oh, amazing. Yeah, I'll always come back if you have me.
Super.
Have a good one.
I would love to do this again, for sure. We should do this in about 6 months' time, towards the end of the year.
Definitely.
Yeah.
Yeah.
Okay.
For sure.
Well, folks, thank you for watching this week's episode of The Trading Battle with Siam Kidd. I'm sure you found it just as interesting as I did. I'm going to watch this when it's published in a few weeks. Siam, thank you so much. Let's try and do this again in 6 months' time, as I said.